fiscal standpoint, how sustainable is this kind of fuel price intervention, and what are the potential long-term implications for the economy?
Well, thank you, and good afternoon to your listeners. Thanks for having me. I think we cannot run away from the fact that it's actually a bottleneck that the president and his cabinet are trying to release or relieve us as citizens from, as consumers. I can tell you this, that it will come at a cost, yes, but it takes a good economic foundation and a firm, adjusted ground for you to be able to take such bold decisions. There's been some accumulations that were doing good things for us, the energy levy, the one Ghana cedi that was actually added on. So you could see that the Minister of Finance came out to tell us what they've been using that money for, to actually to avoid the price build-up and then also to clear some of the debts that were existing. So indeed, we made some preparations to manage the system through CSO and other stakeholders, the OMCs and government discussions. And so you realize that the stakeholder public, the citizenry and the consumers understand that government collected these monies for something, but as we speak right now, the hikes that were expected to go on has been forcing government to take a decision to hold, gains that they were making and make sure that they use some of it to rectify some of the heavy burden that will come on the consumer. It was done purposely for two areas, major areas. I mean, looking at the transportation that you just ended the discussion with the gentleman on that transport area where the commercial transport drivers wanted to actually add on and then change their prices. Most of the majority of these vehicles use the diesel product. So that is what informed the decision to actually, provide some cushioning and ensure that the pricing over there come a little bit closer to the petrol one, and then ensure that the drivers can resign their decision of increasing the fare. Again, it is a tough time, yes, again, for industry. Most of the factory running machines depend on diesel. So it also had that factory and industrial look, so that nobody would say that because of the cost, they will lay off workers or suspend activities of some of their production. So this is the two areas that government looked at and said, look, we'll bite the bullet and make sure that we actually suspend the inroads and gains that we are making and then stabilize the situation with this investment. So it is not a cost that is negative. It is an investment in transportation fares and then an investment also in production to ensure that you sustain production and sustain industrial growth and productivity, while you are also checking not only from transportation fares, but then those who import goods from the other countrysides.
Right.
Those who are bringing goods and services from the regional body areas to the capital, they'll start increasing food and everything else by the cost of the transportation fare going up. So it is a good investment, but like I've said, yes, it will have an impact.
Talking about impacts, another tax analyst, Francis Timori-Boy, is actually cautioning that government should set clear limits for fuel price interventions. You have lauded government in this regard, but Timori-Boy is saying that, look, it could lead to the repeated subsidies that we are, having from government could lead to pressure on public finances and potentially lead to the introduction of new taxes. How do you react to this?
I respectfully call on my brother, my fellow analyst. I respect his view. This about engaging differences. I humbly differ a bit from his arguments, where I'm looking at interventions that are strategic. So before everything else, there was an imposition of a 1 Ghana cedi to come and do something. What we seek to do, we sought to do something we call the cost build-up through the subsidy action. So that 1 Ghana cedi came to do that one. So for the particular period running from 2025, there was no build-up. It was able to manage the cost. And then even from what the finance minister presented, there was an inroad of going back to settle some of the debt that was leaving. So at the end of the day, the existing debt has been slightly slashed. You've done some inroads with avoiding a build-up, of course. So his advice is clear. I agree with him. But then it is also important to make sure that you also look at the other side of it. What do you lose if you give this? You lose about 30 30 eggs and then you gain 70 eggs. That's what you are looking at. So at the end of the day, you don't get factories telling you that they are halting production or they are cutting size or making sure that they stop production and wait for the better season when the fuel or the diesel comes down. So that's why you are injecting in there. So it's an investment that you are putting in there to increase and sustain your tax base. Again, like I've told you, it will affect food and other things if you don't manage it well, because then the moment those who are cutting the goods and going in and out to provide services, I have seen that there's an increase in in the transportation fare. They begin to also do
it trickles down
prices to the consumables on the market.
Mr. Ocansey, let me thank you for your time this afternoon.
And thank you very much, and thanks for the opportunity.
Right. It's a tax analyst, Geoffrey Ocansey there. That's a 12 Live on Class 91.